Hello, good afternoon, and welcome once again to your wealth class on this television channel. I am Abayomi Obabulujo. We've got a lot to do on this platform today, but the major focus is how to detect cheap stocks in our market. Because you see, at any point in time, of course, there are quite a number of opinions and school of thoughts as far as price is concerned in equity selection process. But whichever way, the essence of investing is to be able to bail out at a future date. I believe fundamentally, and that is what we do say in Abionomics, that in the long run, every stock, no matter what quantity you are holding today, stands to be transferred from one fellow to another, from one investor to another. But we take off by looking at what is happening so far, so good, on the floor of the Nigerian Stock Exchange, today being the first trading session for the week. And incidentally, this is also the last week for this month. And when the market opened in about 2.5 hours before now, virtually all the indicators were in the green. But the market is bearish. And so, as we speak, most of the key indicators are actually in the red. The All-Share Index of the Nigerian Stock Exchange is currently down 0.03%. NSE 30 down 0.2%, NSE 50 down 0.14%, NSE Corporate Governance down 0.18%, NSE Consumer Goods down 0.32%, NSE Lotus down 0.21%, NSE Mainboard down 0.06%, NSE Premium Index down 0.01%, whereas NSE Pension, I've told you on this platform that basically there are two major indexes that you should follow aside from the All-Share Index of the Nigerian Stock Exchange. They include the NSE Pension Index. That is where the major investors in this market, as a matter of fact, with what is happening in the market as we speak, but for the fact that there are pension fund administrators and quite a number of them are investors in the market, what we are seeing in the market will have been worse off than what the market experienced between 2008, beginning from February, and which extended till sometimes 2010 before we began to see recovery. At that, we saw equities largely losing their value up until today. Quite a number of them are yet to fully recover from their highest prices as at 28th of February 2008. But as we speak now, the market is better structured. The level of liquidity is so better. And you know, earlier than now, in 2006, 2007, 2008, the market largely depended on the investments from foreign investors, right? And as we speak now, quite a number of institutional investors that are not necessarily foreign do operate in our market. And so as the foreign investors are making their ways out of the market, then largely these pension fund administrators are able to a large extent to mop up what they are divesting from. But you know, in 2008, the market was operating not only on the capacity or strength of institutional investors, there was a lot of margin facilities. And unfortunately enough, many Nigerians did not understand how margin facilities worked. And so the market crashed. But to a large extent, with what we see, the market, yes, is bearish as we speak. And I will show you an indicator which actually shows the bearish nature of the market, which is the moving average convergence and divergence. And you might not be able to see it well, but you've got to just manage what we're able to provide. Now, when you see in the MACD, there is the signal line. In the signal line, everything you see below it indicates a bearish nature. Please, I will appreciate if the NSE ASI MACD could be shown on the screen. Now, yes, thank you. You will see where there is the red arrow pointing down. That is at the point where there is the signal line. And so the column under, right, where you see white, and you might, if you see the screen very well, there is the blue line and there is also the red line. So those regions actually are indicating the fact that the market is bearish. And I need to explain what these indicators will do for you. Now, sometimes when this type of indicator shows that the market is bearish, that is not to say that within the bearish trend that we cannot see the market either moving up or moving down. This could also be deployed to analyze specific equities. This will work in any market at all. I started trading foreign markets at least 21 years. It is still the same that we deploy. So now, seeing this, if you are deploying it to analyzing specific equity and you see the MACD showing you that that stock is bearish, or the market generally, it is showing you that the market is bearish, what is possible is, for the sake of argument, a stock could be selling at 15 naira and it is bearish. So what you will see, the moving averages we do at intervals is that that stock is not just going to come down straight away and hit 14 naira and stay there. No, that is not the way the prices of equities move. It will get to 14 naira, it will stay a little bit, and then there will be an intersection among the moving averages. And at that, though the market is still bearish, the equity that was 15 naira that is now 14 naira might get back to 14.20. It might get to 14.50, and from there to 14.80. But yet it is bearish. It will begin to descend again, and as it is descending, it will get to the 14 naira, then climb down to probably 13 naira and begin to move up again. That is the way the prices of equities move when you are using an indicator like the MACD. For those that were at our training on Saturday, I was the last speaker and I took time to talk about this. So as we speak, the market is bearish, showing, going by what we can see in the MACD, right? And when the market is bearish, that is when you need to be very careful. One, you don't invest in frivolous stocks. You don't invest anyhow. You look for fundamentally sound stocks. And that is why we are focusing on what I call cheap stocks. Now, let me quickly show you a few figures that emanated from trading activities on the floor of the Nigerian Stock Exchange last week. For example, we saw market capitalization growing by 0.45%. We saw the All-Share Index growing by 0.45%. But in actual fact, the market was down. So if all you do is to go by what the Usher index and market capitalization, which is what is commonly reported in the media, if all you do is go by that, you will be misleading yourself. And that is why we take time on this platform to explain the fact that there are other indicators that you will need to consider to actually see the true position of the market. For example, for last week, you could see that deals tells you the number of times a particular stock, or generally the market, the number of times stocks were bidded and stocks were also offered, the number of times they were actually purchased. For example, stockbroker A for a stock bidded like 4 times and those orders were executed. So the market will capture all, combine them together, and subsequently add them together, and that is what you see. So the number of times trades were executed last week was down 42%. You cannot convince anyone that such a market is up. Not that alone, the total number of shares that were traded for that last week also declined by 15.52%. That also shows that the market is down. Total amount that was invested in 1 naira, 10 naira, 1 billion naira, 500 million naira in all the equities that were traded last week for that week was down 18.33%. Then the number of gainers 15, number of losers 45. Without much ado, you could see that though they indicate the market capitalization and the Usher index were showing positive figures, but generally other indicators, when you put them together, will show you a clearer picture of the fact that the market was actually weak. So the question you should now put to me is, why then do we have Usher index growing by 0.45% and market capitalization growing by 0.45%? I will now take you to the best stocks for the week. Now, when you look at the best stocks for the week, all of them, there are just one, basically, that has weight on the Usher index of the Nigerian Stock Exchange. If you look at New Rest is the company that is that was Aviation Services Limited, ASL, right? You talk about Skybank. Of course, last week, New Rest grew by 19.10%, but the weight on the Usher index of the stock exchange is rather weak. It's not going to impact the index in any way. Then we talk about Skybank. The market is even still waiting for the second quarter report. We even have the audited report. I can't remember seeing any report from Skybank for almost a year. Notwithstanding, the stock grew 18.75% last week. Will I be telling you to invest in that? In this kind of market, my answer is Capital NO. FCMB, Veritas Capital. Veritas Capital used to be Unity Insurance, right? So it grew by 7.69% last week. That is not where I'm going yet. Now, where I'm going is Dangote Cement. Dangote Cement grew by 6.82% last week. And so that was why the All-Share Index of the Nigerian Stock Exchange grew, right, for those 3 trading sessions, and we saw 0.45%. If you recall, while we were still on this platform last week, Monday, the indicators were showing that the market was in the red. And I did say specifically that the only force that could ensure that the market did not eventually end last week, Monday, in the negative was if Dangote Cement price should close in the positive region, which happened. And so the market grew on Monday of last week. So now, to further buttress this fact, you see, Dangote Cement featured or will appear aside from what it does on the all share index of the Nigerian Stock Exchange, if you go to NSE Industrial Goods Index, you will see the impact of Dangote Cement there. So for the week under review, NSE Industrial grew by 1.96%, courtesy the price performance of Dangote Cement. And then NSE Premium, because when you talk about NSE Premium, there are only 7 of them there, which include Access, Dangote Cement, then Zenith, FBNH, then Seplant, Lafarge, WAPCO. So those are the equities that constitute the NSE Premium. And I've told you, if you just decide to build your portfolio around these, maybe 5 or 6 of them, which include Access, Zenith, Dangote, and FBNH, those that we trust, you will not lose. So for last week, NSE Premium grew by 3.15%. They even performed better than the market. That is how to gauge, that is how to measure market performance at any point in time. Our time is fast spent because we still have quite a number of things to do on this platform. But let me take you through this table, which I call good stocks at cheap prices as we speak. Meanwhile, if you get to buy Stocks Watch Weekly newspaper today and for the entire week, you are going to see the comprehensive analysis. I think I was able to write on 10 of them, and you will even see the table that will show you. Let me tell you what I did. Number 1, whenever you see a good stock selling at its year's lowest price, please, you need to begin to watch those type of equity. Access is selling at 9 naira. It's year's low, right? Now, then we have Continental Insurance, 40 Oil, Transcorp, Honeywell, UBA, Fidelity, and quite a number of them. I can only capture a few because of our time here on this platform. But when you get Stocks Watch Weekly newspaper, you are going to get more details on this. Now, when you see them selling at their lowest price for the year, remember that some people will have bought these equities at their highest prices in the year. Now, why do we now see them at their lowest prices in the year? Is it that because of their results that are coming in, we are expecting the result of Access Bank and it's going to be audited, and we expect minimum of 20 kobo a dividend? The same thing UBA and the same thing Fidelity. We don't know how much we are expecting in Fidelity, but they have just announced that they are coming with an audited second quarter report, right? If you look at some others that I even wrote there, Transcorp, Honeywell, and Continental Reinsurance, I couldn't capture their earnings per share for the quarter on the table you are seeing, but on the pages of the newspaper, I did that comprehensively there. Even Access, let us assume that the bank decides not to release second quarter report. Let us assume that as at the end of the first quarter, the bank did not do anything. Let us assume that no income came in for them at all. What this institution delivered as at the end of their first quarter, right, brought their book value to 15 naira 71 kobo. Now, this is the importance of book value. Of course, so many analysts and investors will form different opinion. It tells you if they are to go, that is what I call worst case scenario analysis. And the worst that can happen to any man is to die. The worst that can happen to any institution is to collapse, all right? Is to be liquidated. So we are not looking at the relationship between the assets that this organization have been able to build over the years relative to the outstanding number of shares. How do you arrive at that? You look at the total assets of the organization, and then you subtract the total liability from the total asset. What you get is the shareholders fund. When you divide that by the outstanding number of shares, it will give you the book value. Now, when the book value of a company as at the first quarter is 15 naira 71 kobo, and yet the market is now pricing it 9 naira, you should see why I said it is cheap. Now, there are equities you can buy when the market is coming down more of. For example, maybe you bought at 12, you bought at 13, you are now seeing it at 9. You could buy more. When it comes, for whatever reason, to 5, buy more. That is talking about the relationship between market fundamental and the fundamental of specific equities, right? You look at a stock, for example, like Transcorp. So what I've done was to pick the book value of all these equities, looking or considering the fact that they are selling at their lowest level in the year, and considering the fact also that the results emanating from them, the results are fantastic. All right. And then you look at even the relationship between their lowest price and the highest price they attained, so far so good, in the year. And then when you put this together, you relate the current price with the last result declared, either first quarter or second quarter. That will give you PE ratio. PE ratio will tell you the number of years it will take you if an organization should divide the earnings for that period, all right, among all the shareholders. How much would someone that owns 1 unit of that equity get? These are facts. These are the truth on how to position yourself to get the best when the market is trending down. Of course, like I've said, we could only do a little on this platform. Go get a copy of StockSwatch Weekly Newspaper. All right? We are still talking money. Our objective on this platform is to make you a total Nigerian. You are not looking to the hands of anyone to feed you. All right? I'm still here. I'm not going anywhere yet. So you should not change this TV dial this TV channel, because I'm still coming back. And when I return, we'll still be talking about how life can be better for you. I will be right back.